Friday, May 16th, 10:13 a.m. New York time. Welcome back, investors, to Winning Wall Street's Money. Last day of the week, middle of the month. I just took a day trade this morning on the derivatives, on the futures. Currently, I've been trading all week long in the futures market in the category of currencies, euro, US dollar, and that's what I did this morning. I took one trade. Happy camper. It worked out well for me. We're looking here at three grids. The far left is the daily chart. Top right is the 5-minute, and the bottom right is the 1-minute. The euro US dollar. The symbol on the futures exchange, because it trades on the CME futures exchange, there's more than one futures exchange, symbols /6E. You can see that in the top corner of each grid. Yep. So my bias this morning was bearish. I look at the daily chart, which you see on the far left, and some other intraday timeframes and higher timeframes. So you can see the grid on the far left. It's currently yellow candle. Yesterday was a yellow candle, and the day before that was the red candle with that huge wick on top. On the far left, see this huge wick. Yep. And that was midpoint there, that gray horizontal line I drew there. So yesterday, it tested it, filled the close there. And overnight, we tested it. So again, I was leaning bearish bias because I'm seeing what I interpret as distribution here. Weak hands. Yes, there's buyers up here, but they're not strong enough to hold it to make higher highs. And I'm thinking, yeah, we might go down and test this area. That could be another day trade, another swing trade on a break below here, the break below that red candle. Break below it, be the trigger. Watch for a little retracement on the upside on the lower time frame, and then look for that reversal on that lower time frame and take it. Well, it might even happen here. Get trade futures options. Okay. So on the 5-minute here, huge consolidation pre-market. There was news at 10 a.m., so I hesitated taking any trade before that 10 a.m. Between the 9:30 and 10 a.m., I didn't take any trade. So in the bottom right grid, the 1-minute here, see that golden area? That's 9:30, 0930 to 0945, the first 15 minutes of the New York Stock Exchange. And then we broke out of it, ran up, took out this pre-market high, this yellow horizontal line, we took out the pre-market high. But during that first 15 minutes, we also broke these lows. Yeah, a lot of fake outs. Again, I sat on my hands, didn't take any trades. Even came down here to this green demand zone. Sure, in hindsight, I could have bought it. Went bullish, ran up, made some profits. And here, went up, tested it, saw this occur, and had time to still do a trade, but I didn't want to. I'd rather sit on hands, wait till that news. But again, I was leaning bearish buys up here, and that was the sweet spot, take the trade. But I just knew from experience between that time, 9:50 something 3, before 10 o'clock, it could still have spikes and shakeouts. So why would I want to take that risk if I don't think it's a A+ setup without the risk? Yep. So this big horizontal line, vertical line was the 10 a.m. news. And you can see on the 5-minute one, after the 10 a.m. news, huge sell-off. Nice. So let me show you on my 1-minute chart. Here we are on the 1-minute chart. Vertical line here, yellow line, the New York Open, 0930. Vertical line here, the orange, was the 10 a.m. economic news. And then when we had break below here, again, that first 1 minute, huge volatility, went back up, back down to that big 1-minute candle. Let me zoom in. Yep, so there. So I didn't take the trade there. Nope. I waited for a retracement, a part of this 1-minute candle. That big red one that took out that high and low. Right here, that retracement in here. I went short here. Went back inside that. And then broke below that. And where was my target? My first target was right down here. The low of this New York session. Right here, the first 15 minutes. Even though I know on a bigger picture, I was thinking we're still going to go lower to these other ones. But again, I want to get in and out fast. It's Friday morning. It may not be all in my favor. Yep. So went short here. Huge impulse move down right here in that 1 minute, hitting my target price, closing my trade right at it. And then the next 1 minute went lower low, lower high. So again, hit this target. Sure, I left money on the table. I missed making out of more money. Again, it might have never went all the way down there and could have lost my trade. So small gains, winning trade, happy camper, because look what happened. Huge retracement, 100% retracement back into this impulse move down. 1 minute impulse move down. And see what happened here. Buyers stepped in right there. Buyers stepped in, took control, ran up, higher high. So again, nice opportunity. So here, another consolidation, breakdown, lower low, sure. If I stayed in, sure, my gains would be more. I'm not taking that risk. Let me show you my other screen, what I call my radar screen. So let me actually put this also back on the flex, again, the daily chart. Back here, this is 4 grids I have on another monitor. So these are 4 grids. Top right is the 4-hour. Top left is the 1 hour. The bottom right is the 15-minute. The bottom left is the 5 minutes. Again, look at the 2 top grids. They're higher time frames, 4-hour in the top right and the top left 1 hour. I can see a lot more history, a price action in each of those candles. Good insight. Look on the 4-hour, the top right. Huge consolidation the past several days here. We had this impulse move down, consolidation. They pumped it up on weakness. And you see these lower highs, that high, never took out that high, and then that high. So I'll draw it here. It's a wedge pattern. See that? It's a wedge pattern. Weaker, 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 weaker. Wedge pattern. It was tight as a coil, getting tighter, 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 and breaking down. So again, another target down here. See this gray area, imbalance area target. But again, I'm not staying in for all that duration. Again, day trading, I'm not varying positions. And then on the 15-minute Asian session here, they ran it up, London session. And then after the London session, never made it. Again, I just seen what I'm interpreting as distribution. Dumb money buying up here, smart money selling. And that's what I was looking at. And this was all fake out. Huge consolidation, luring in new buyers. They pumped it up into that news. I told you 10 o'clock news here. And then smackdown. So this is a seller shut off. Everybody that bought here, anybody that bought here, that held onto their positions into the news, fast move down, engulfing candle, all of them got trapped. All those bulls, long positions got trapped and moved down. So if they're still in the trade, if they're still in the positions long, they're losing. They're not in gains. They're negative. And look at that, we're hitting key level right down here. You see here in top left of the 1 hour too, right here, key level. That was one of my targets there too. Yep. So that's how I choose good financial instruments. I choose this instead of stocks. You go ahead and choose those other financial instruments. I just think there's a lot occurring on currencies, geopolitical, financially, economically. And this is one of the good currency pairs to be trading. Thank you as always, spending just a little time with me. That's it for the video. Thank you for watching.